Hello and welcome back to this Wednesday edition of FreightWaves Now. I'm your host, Anthony Smith, and coming up, Andrew Cox is here with us, and he's going to give us a shipper update. We also have Jack Strickland here with us, and he's going to give us a carrier update brought to you by PowerFleet. Stay tuned.
Everyone, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zach Strickland, and it's been a while since we talked last, so let's give a nice high-level update of what we're seeing in the market over the last couple of days or so. So tender volume index pulled up here first. This blue line, the blue mountains right there, we're still continuing to see this index increase, shockingly so as we enter the final week or so of July. So this is not necessarily anticipated by any means. We thought these would definitely start to come down as we approach the end of the month for sure, but so far you can see, seasonally speaking, that tends to be the case as volumes in 2018 and 2019 both subsided after the 4th of July. Looking at the orange line there, that was 2018, considered obviously one of the hotter periods. Is probably the end of the hottest period of the freight market if we look back in hindsight and notice that now. 2019 was a pretty dull July. We did see some increasing volumes last year through the month of August, but capacity, of course, extremely prevalent during this period of time, keeping those spot rates really low. But this will be interesting to watch moving forward as we continue to see these freight volumes increase entering August. August and September typically have a little bit of a recovery in volumes traditionally, so maybe there could be the potential that we see these volumes kind of compile entering the last part of the summer here. So looking at capacity itself, as expected with volumes increasing, we're seeing tender rejection rates take a nice little bump up here, 16.87% on the outbound tender rejection index for 2019, sitting there in the blue line, or 2020 sitting there in the blue line. 2018, again, that hot time in the freight market sitting up there in the orange line. We're still well below that, but we are getting closer and closer. An interesting little aspect of the tender rejection index right now is that we are moving somewhat horizontal, and we are still above July 4th values. So could this be an indication that the market is going to remain tight for an extended period of time? Maybe. It has remained tighter longer than anticipated, just like we're seeing the volumes. Looking down here in this sad little 2019 chart, the green line there, we can see tender rejection rates right around 5% at this point last year. So we have changed dramatically year over year in terms of capacity, in the United States. So looking at where are we seeing any changes? And again, that line was not moving up quickly nor down fast as well. So it's, we are seeing kind of a stabilization at current tender rejection levels in the United States. Looking at the nation's largest markets here with our volatility map, we can see Atlanta, Georgia did take a little bit of a drop in tender rejection rate, but still elevated at 16.9%. Ontario, California, out west, along the ports and the coast there, where a lot of freight enters the market, still continues to be pretty tight, relatively, considering that's a 17.91% tender rejection rate. So again, we're close to a fifth of all freight tenders getting rejected by carriers right now in some of the largest markets in the country. And again, these are the largest outbound points in the United States, in Atlanta, Ontario, Dallas. Dallas has been one of the hotter markets, and you can see over there on the map in red that it is starting to cool down quite rapidly. We've got an 18.43% tender rejection rate. Still remains pretty hot in terms of tightness, but again, coming down quickly this week, so don't expect the same type of activity that you saw last week, but it's still very tight in just about every market that you look at here. There's only Elizabeth, New Jersey, up there in the Northeast, 10.89%, the softest market on this chart that you're looking at right here. But you notice that green line, that was the Houston market, and let's take a quick look at the Houston market and what's going on right now. Again, week over week, tender rejection rates still remain elevated, but we did have a slight contraction yesterday as tender rejection rates dropped back down to 19.56. Again, very hot and very tight market, and it looks like the tweener and long haul freight are the lengths of haul to watch. Houston is typically a very regional market, but anything moving over about 450 miles getting a lot more rejections than the rest. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to this shipper update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Tony, we got two really important consumer and retail data sets that released at the end of last week. The first one is pretty good. I'm going to talk to you. It's the retail sales from the Census Bureau. The other one is the consumer sentiment from University of Michigan, which pulled back a little bit, but we'll get to that. First here is the retail sales. As I said, you can see across the board pretty widespread gains. Overall, it was up 7.5% from May to June. You can remember that April was that bottom. We had a really strong May, up 17 or 18%, and we continued that gain into June, although it's at a slower pace here at 7.5%. But again, you can see there's some big numbers here. Motor and vehicle parts up almost 10%. Some good brick and mortar up. The apparel's down here over 100%. General merchandise up as well. One that I do wanted to highlight or talk a little bit more about is this non-store retail sales. This is the online storefronts without physical storefronts. We're looking at Amazon or Shopify sites of that nature. So I had wondered whether this gain, this recovery in brick and mortar had come at the expense of the online, the non-store retailers. And there's some Bank of America data that suggests that's not the case. You can see this blue line here is daily retail spending brick and mortar, and the yellow is daily retail spending online. This is year-over-year change. You can see the recovery in brick and mortar has not really come at the expense of online retail. So those people, those shippers out there looking for the new normal, they should really expect that online spending is here to stay.
And when we're looking at online retail, this is something that was strong before COVID-19, and so it's almost been exacerbated. And as you mentioned, it's not going anywhere anytime soon.
Yeah, that's exactly right. And one thing that I do want to kind of maybe take off the rose-tinted glasses here, we've had two really strong consecutive months in May and in June on the retail sales side, but this is our first half 2020 compared to first half 2019, broken down by the same categories, those retail sales. You can see there's only 4 out of the 13 or so here that are positive year over year through the first half of the year. So we've really got a long way to go before we can get back to pre-COVID spending levels. And another chart I have for you to kind of might also dampen the optimism here. And this is some really cool foot traffic data from Placer AI that I think is really pertinent when we're looking at spending data. And again, that was lagging data from the month of June, that retail spending data. So it was really in the middle of June when we started to see the case re-outbreak, that secondary outbreak across the country. We know, looking at this data back in March, we knew that consumers started spending their habits, started changing their spending habits before the lockdowns even began. They stopped going to restaurants weeks before lockdowns began. So this is really kind of forward-looking data as to how the spending will go. And I have some categories here for you. The bottom is apparel, shopping centers, and dining. You can see that they've all were on a strong recovery, but have sputtered really at that -20 or -40% range. And I think this really has a lot to do with just the re-outbreak. People are already changing their habits, and we're going to see that show up in the July data when we get it.
And one of the things you mentioned a little bit earlier was consumer confidence. Do you think this is going to play an impact with some of the foot traffic we see in brick and mortar stores moving forward?
Well, that's exactly what we have seen here. That University of Michigan data is for the month of July, and it was taken during the first couple weeks of July, and it pulled back, I think, from 78 something to the mid 70s range into 73. So we did see a pullback. I think a lot of that has to do with fears of the virus. That was said during a lot of the notes in the survey. I definitely think it will kind of pull back on a little of that foot traffic, especially in those areas where it's highly impacted in the Southwest and in the Southeast. But yeah, I think overall we're getting there. We don't need to rush to reopening. But the good thing is that online spending is here to stay. So I think that can kind of pick up for some of the loss in the brick and mortar.
Another potential headwind, right? We're looking at jobless claims and those jobless benefits that were set to expire here in the next few weeks.
Yeah, they're set to expire, I guess, in 9 days here at the end of the month. I know that Secretary Mnuchin and Speaker Pelosi are both working together to get the plans together. They're on two opposite spectrums right now, but I do think they're going to get a deal done. I think we're going to get another round of stimulus. I don't know exactly where it's going to be aimed yet, but that will be foreseen in the next couple days. But I do think they'll get it done.
Amazing. And Andrew, where can people find more?
Yeah, you can go to freightwaves.com/passport for all of our research. We're also going to have a new podcast coming out. I guess we missed one yesterday because of our FreightWaves Live 3PL Summit, but we'll be back next Tuesday. Me, Seth Holm, and Kevin Hill for Great Quarter Guys.
Excellent. Looking forward to it. Thank you so much. And thank you so much for tuning in. That's going to do it for this Wednesday edition of FreightWaves Now. The content does not stop here. We're always streaming around the clock, so check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.